Hey everybody. All right. I'm gonna look at my journal real quick. Yo, yo, great to see you some people. Just wanted to go get my journal. We talk over a few things while I explain some pieces out. Uh, I got to do better with like connecting the weeks because I forget about what I talked about last week, and then I'm trying to like relate back to it this week, and then bridge it into the next week. So I gotta go take a look to see what I talked about last week. Um, and let's try to bridge it. Um, so, we definitely talked about the possible path of price on the triple Qs, right? We know how important triple Qs are, um, and how we saw some great price move up since the lows that we saw of like the 580s. But I kind of wanted to try to price in like there could be something here for some like some downside, right? I think that was a big talking point last week, right? Like a lot of times I tried to find the and I'm actually reading the book right now, and it's actually a rather tough read all in all, like kind of. But the read really the read is the Black Swan, right? So finding risk where it doesn't seem to be, generally speaking, uh, and then try to figure out where it could be, like, where it could be misused, where it could be taken advantage of, where risk could be free, right? Like, playing the downside this week on Qs, right, seem to have been good risk, right? Like, um in the sense of, like, not that crazy, um, but also just something pretty huge all in all, right? So we talked about that, we talked about the potential of seeing Hood step up, we reviewed Caterpillar, we reviewed Cease and, so the banks and financials, we reviewed BlackRock, talked a little more about Reddit, uh, I even went back in this week, tried to replay Reddit. I mean, I think I profited. It ended up being like a 7% win, like, but, I mean, ultimately, it was still good. We talked about FOMC. We talked about FOMC and how it could be used. Um, talked about the labor data, that being a potential problem coming up. Um, what else? Talked about unemployment, lots of macro trends, and also talking about the cost of AI, how that's decreased dramatically. And then we got a little bit into financials, showing the financial books were good. And now materials were very low, so we're seeing secular movements as well. Secular movements all in all. What's going on? Lemonade, JP Morgan also did its thing. Oh, that's crazy. I think I drafted up JP Morgan, and then they had that whole ordeal this past week where it dropped 4% in a day and erased it entirely. Like, that's crazy. Oh, okay, look, hold on, y'all. Hold on. Alright, watch this, watch this. Um, got y'all with this one real quick. Watch this. So boom. Last week I was here streaming with y'all. There's no audio on this one, but I figured, yo, like, let's talk about JP Morgan. We talked about JP Morgan a little bit, how the financial sector is picking up, FOMC right around. And as I flipped through it, I made a whole entry to manage risk on both sides. Like, all right, cool. Like, I was saying how I didn't like the risk up at where I was marking it 318 to push it all the way back because I know 302 could kind of be a price range where um, where it could fully pull back to, like, without any question mark to it, without any real pain to it. Like, you can go watch this in last week's stream. I'm at like a minute 14 right here, so you could see where I was talking about it. Like, hey, like, if it doesn't even go up to, if it doesn't even go up to that, we can take this thing that's like a little bit lower. If we somehow get a move down lower, and then we can potentially take it up back in, right? I'm forgetting what caused what's it call it to JP Morgan to fall the way it did for real. Um, but look at it now. Or after a week of price movement, boom. Right? So I was drawing up the trade from 318 range, talking about that could be the entry of it. I kind of liked it, but I didn't really like the risk to it. So I figured, you know what, like like this is cool and all, but it's not really it. I really would like to get entries down here at 305. So if he somehow came down to 305, right? I would like to have that entry to take it back up. I'm trying to remember what happened. Oh, I remember what happened. Great. I'm about to connect mad dots. Okay. So I think I dropped this in the integral vault as well. Finch, the firm that does everybody's ratings. Well, maybe not everybody, but everybody basically. So Finch, oh, I didn't drop this in the integral research. Oh, That's crazy. So a few weeks ago, it came out that Finch credit rating JP. Okay, so a few ago, it came out that JP Morgan's going to accept crypto as collateral now, only for its institutional partners and XYZ, rada rada, right? Awesome, right? It became cool. Mass adaptation about crypto, right? And that was something super good for the growth of the community and all of it as crypto. And then I believe Finch recently downgraded JP Morgan's credit rating, basically saying risks are there now that it's looking to take on institutional grade crypto as collateral for cash, basically, right? For liquidity for these firms. And the stock dropped, as you can see here. It rocketed like 4%. Yeah, like 4.5% on the day. I looked at it, just had a breath of like, oh, this is a great buy. Like, why would we not like JP Morgan here, right? Like, we drew it up last week. I think we should like it, right? And I didn't quite see any sweepers into the JP Morgan. I think that was ultimately the reason why I didn't end up taking it. I didn't see any sweepers until later on that week. So once it had already moved out of this risk zone into like the 310s, no sweepers kind of came through until what sweep? We saw one sweep for the 350 calls for February, and that was about 220K in premium, and that was basically it, right? So I think that was the main issue. I didn't have a ton of like view in is that what it was? JP Morgan. Yeah, JP Morgan, 1125. I dropped this in the cryptology chat or cryptography chat. Sorry. I was like, yo, crypto's moving, or JP Morgan said crypto's moving away from resembling a venture capital style ecosystem to a typically tradable macro asset class supported by institutional liquidity rather than retail speculation. One speaker noted that it could potentially reach 240K over the long term, thus indicating it as a multi-year growth play. And that was in relation to Bitcoin, of course, right? And JP Morgan goes on to talk a bit further about it. So actually put it up here, guys. So you can see it as well. Boom. Right? We talked about what was going on. JP Morgan is doing all this stuff. And then on this side, you can see the sweep that I called out. I was like, yo, this is a pretty sizable sweep with good duration and a good strike price. I ended up missing this entirely. But ultimately it was a good trade, right? Where we bounced down aggressively after the Finch or the credit rating downgrade, saying that they were citing risks for taking on liquidity. And it's so interesting because they took on liquidity, and then ultimately, literally just a bit ago, and then following that, right? December 9th, we got a letter from the comptroller of currency in DC saying, hey, you can now literally hold, right, crypto asset transactions and crypto assets themselves. So that was something super cool that also happened recently in history. I don't think many people kind of noticed this one. I think it's been in the like in the pipeline to occur eventually, but I don't know if anybody got on like a heads up as like, oh, it's actually happening. And then a few days later now we get this where we literally see, hey, JP Morgan arranges landmark US commercial paper issuance on the Solana public chain for Galaxy Digital Holdings, the limited partners of the Galaxy Digital Holdings. If you're not familiar with Galaxy, the company Galaxy is a institutional grade company that really deals in the I'd say more of like an investment side of crypto. They offer exposure to crypto. They also do some literal like in real world assets like data center stuff, infrastructure stuff. I believe they were originally part of the mining sector more so, and have now transitioned not only into mining but also using their infrastructure on data centers to then grow their institutional grade crypto offering basically as a company. So I believe JP Morgan underwrote this loan and accepted Solana as the collateral for this loan that Galaxy wanted to try and take on here. So we saw that was insane. That ultimately was able to get a few pieces in the puzzle to get all signed up. So that was that. It's pretty cool to see JP Morgan just flip like that. If I come here and maybe share my trading window, it's on Galaxy now, but really just want to take a look at this, the same setup I have made from a while ago. Look at some of the other banks, financials. So you see Citi go from 108 to 111 this week. Huge move up. Right? Wells Fargo, I believe, also another financial institution showing strong strength, right? What we talked about last week with financials and the flows into financials, right? The data flows. I believe also last week I shared this with us, right? Goldman Sachs U.S. financial conditions indices showing, hey, this is financial conditions tightening. This is financial condition. This side of the spectrum, or the y-axis, is loosening, right? So we are in a economic loosening of the financial conditions, basically meaning more free flow. Thoughts on Bitcoin starting to move extremely institutional with BlackRock owning most of it. I mean, that's definitely a thing. I don't know what the long-standing effects of it really comes from, to be honest with you. Like, I have no idea, but like, I'm thinking it could be. Yo, appreciate it. Sheesh, crazy work.
Don't let my food get cold playing that little stream, man.
Nah, this is crazy work, y'all. Oh man. Are we back? Okay, I think we're back. Sorry. Lost the mic a little bit for a second there. But I think one thing that I really wanted to address on this was that the financial conditions are the financial conditions right now are loosening, right? And what that means is that economic conditions as a whole are going to get better. So the companies that thrive in a good sector, right, are going to continue to thrive, as well as the companies that are cyclical and maybe go through. They're basically cyclical stocks, are just stocks that are more aggressively correlated with the growth of the economy as a whole, right? And what that means as well is that when the economy is tightening, right, when we're raising rates and we're trying to lock down on capital, um, only certain winners really win, right? Which are the ones that have the most cash on deck and the biggest moats and and really providing probably it's like some of the biggest value, right? So the think top 10 on the top 10 in the market, basically, right? Big tech. Um, Now some new entrances into the top 10 basically are I think Eli Lilly is now like in that realm, right? With health um, and um, and some other companies, right? But when we're seeing these conditions happen, like this is where the secular or the cyclical names rather are going to see much more names. But Bitcoin, actually, the interesting thing on Bitcoin that I also wanted was my fault, y'all. Sometimes connecting the audio doesn't really allow me to do some other pieces. So I wanted to send that through. I had the phone, I had the data on my phone, but not in Discord here. So I just wanted to send that through as well to talk about this in a bit. I mean, BlackRock is exactly what it wanted to be. You know what I mean? It wants to be the biggest asset holder in the distribution channel. You know, um, I think it definitely poses a risk, right, for all these assets to be so tightly knit. But I think it's going to have a really interesting point of view because with BlackRock being such a big holder in the space, I think it's going to be big because when all these assets get locked away, and especially with the fact that since Bitcoin itself is finite, right, like it's 21 million, that's it. When we just think back to supply demand, like pendulum stuff, it means that more institutions are holding them. They're going to hold them and they're going to hold them like large amounts of it, right? And do they plan on selling them? No. Like they'll probably trade them, right? Oh, this was this collateral for this piece, or I'll pay you in Bitcoin for this. And like Bitcoin starts to become very centralized. And that centralization around the institutions, the BlackRocks, the Galaxy, the any of them, JP Morgan even as well, they're going to end up with it on their balance sheet too. That centralization actually increases the value of the coin itself, right? Because let's think about it, right? What has gold done this year? If we go back to just talk about what happened with gold this year, right? Like let's just look at it on a monthly basis, y'all. Exactly. Right. Exactly, coach. So if we just talk about the centralization that happened with gold, this right here, the 60% is all centralized banks saying central banks more knowingly gold's China's central bank saying like, yo, we need to hold this, give me that, and we're just gonna hold it, and that's all they're gonna do. They're gonna hold it. So I find it super interesting how, right, like the phenomena of the central bank stuff. So let me see if I could try to find it. I saw a report or image, I believe, a graphical image. Right. A, a graphical image of like what all in all is going on. Let's see what you're talking about. Let's see what you're talking about. Okay. Right. This is crazy work. This big piece of cabbage. It's a whole lettuce head. My fault, not cabbage. I ain't even gonna lie, this is tough. This is crazy work. This is crazy work. My boy's got put in. Salmon bussin', bro. Salmon bussin'. And a little scallop joint. You know what I mean? Like, look at this. This is what happens when you pull up to your friends. You know what I mean? They just show love. Cause that's what it's like, bro. It's life in the form of having, bro. Oh my goodness. It's the best thing ever. all right. So yeah, I mean, I think that's going to be huge for gold. I mean, Bitcoin, in the sense that if it can replicate some kind of like, and you know what, the other part too is, you know, when they were talking about like, oh, I'll never send somebody 0.00002 just to pay something. Like, that's so stupid. Bitcoin's so volatile. How could I ever pay for anything? This right here is exactly how. Because a lot of the supply is going to get locked up in these holders, and the value will start to become intrinsic. It's just going to naturally appreciate. It's going to naturally appreciate, similarly to how gold has just naturally appreciated, even though it's not even limited to 21 million. Because of that limitation of it, it's going to help exasperate that whole process too. Help push it into something even crazier. That's sick. Gold is still being made. It's still being found. It's still being dug up. It's still being used. And you know what I mean? Yeah. So that's why I think people like Tom Lee are still mad bullish on those things. You know. Oh, and then if you want to stay crypto, relative or crypto relevant, this other video I talked about SEC talking about bringing everything on chain. Oh, my fault. Y'all not seeing that. Right? And SEC wants to bring everything on chain, all the stocks, all the assets, all like everything, so we can make it tradable, so we can put it 24/7, just like crypto. So they're learning from the crypto industry in the sense that, oh, I guess we can have it open at least longer than we currently do. And then, oh, guess what? Oh, I settle payments. You don't need the Swift bank account system. Excuse me. Right? Like, and they're starting to learn from this like nascent technology, right? This like younger technology of crypto. And how it can become something better. So I think all that is to come, but like something like crypto, to me, I've gotten to the point where I don't view it as a tradable asset. To me, like I've tried trading crypto. I see where it makes sense. I see where you could, get good buying points, get good risk vantage points. But the level of grifting, the level of wicking, and like people forcing liquidity and then just to push it, like I'm not in that level of game. Like I know that happens also in the stock market, but at least in the stock market, there's like a little bit of I'm gonna let you know beforehand. You know what I mean? Like there's a little bit of like I'm gonna let you know this is about to go down, bro. Protect yourself. In crypto, I ain't never seen not one clue yet. You know what I mean? They just say, "Oh, we're gonna take it lower, take it lower." Shit like that. And they ain't gonna let you know about nothing. You finna be in that position thinking you straight. And you wake up to a liquidation. Been there. You know what I mean? Not trying to do that again. And it wasn't even because you were over leveraged too. You were calm, cool, had cool. But the wicking and the amount of manipulation and people just trying to get orders filled is up there. It's up there for sure. So this other graph I wanted to show y'all was something I found super interesting. An analyst on Twitter, Bespoke, I think his name is, something like that, posted this. Like, and it's the line graph of the appreciation of the Bitcoin ETF, IBIT, which is run by BlackRock, and the appreciation of the buy and hold, right? Think of that as a neutral, 92%. Buy at the open, sell at the close is down 40%. And then buy at the close, sell at the open is up 222%. On what is that? That's the year? That's over basically since inception. 11. Okay, since inception. That's insane. What are they doing? Close. If you bought at the close since inception and then sell at the following morning, like this is all must be institutional trading. Institutional guys doing this. And same thing with the ETH, right? The buy and hold is actually negative on the year. There's something here. I'm not really sure what quite yet. Or like what this even means, really. But I wonder if it's because of the latency of the market open and how crypto runs overnight. And it causes like these huge shocks in the morning. These huge shocks in the morning that got this ETF pumped 3-4% by 10 for it to like fizzle out by 3:30 to be like up 0.5% on the day. You know what I mean? So I think it's definitely that's definitely another viewpoint. So I thought that was pretty cool to see. Like all the money in crypto really is overnight. It's overnight made. At least when it comes to the ETFs, right? So there's that. What else? Oh, I have some bits and pieces I want to talk about. I want to go over last week's chart with Warby Parker. The Warby trade. Warby. Shout out to the visuals, you know what I mean? Shout out to the optics, you know what I mean? Excuse me. Pardon me. So it starts November 12th. Sweeps. I'm like, what? December 18th, 25. Stock's at 1750, bro. What's going on? 1.2 M's too? That's a good size. What's happening over there? Right? 11, 12. Then I go back to trying to find it. All right. Well, I guess here it is. Boom. This chart right here. Dang, am I blocking it? No, I'm not blocking it. I'm right above it. So boom, you see that? See that right there? How that one is? What is that? That is 3.5%, and then this one's 2.4%. This is 6%, right? This chart came in, I believe, from Goldman, where Citi. It came in from Citi, where it talks about the total spending changes versus last year to this year by subsector of retail. Sector as a whole. At first, my off glance, I was really locked into the off-price retailers, right? TJ Maxx's, Rada, because I went over this on stream. Then as I kept looking, I saw dollar stores do pretty well. But then I saw another line item right here, eyewear optometry. I'm like, yo, they're doing good in consistent growth over last year. Like that's most certainly a positive sign, at least, right? And I saw this while seeing the Warby sweep. I'm like, yo, okay. Like, so I sent this in the market updates. Yeah. On the 19th. I'm like, okay. Well, that's interesting. Things are lining up, right? And then I waited to see the open interest change. Now this comes through the following morning, 8:30, the open interest change, it's increased a lot. This is where following open interest is super, super interesting, right? Because you can see these sweeps come through. You can see the sweeps come through for, right? December 18, 25 call, 1.2 million, rada, all this stuff. But if they don't hold into tomorrow, into the day after, into the following week, into the next month, in November, then this sweep means nothing. This person was trying to trade this for the day. This is not someone with a very, very bullish point of view. That's why also a lot of times same day sweeps of large amounts of money, or like let's say today was Friday the 14th, September, or let's say this is Monday the 15th, and that contract expires that same day. I'm not holding the same weight of a $2 million sweep in the same day on anything, on QQQ, on any asset as strong as somebody coming in with that same size and putting duration on it. Right? I'm viewing that as that person wanting to express a single day trade. And a single day trade is not really my personal strong suit right now. I have done them in in instances where it makes sense to, but it's not my strong suit. I like to find names like this, stories like this, where I do deep macro and micro research on the company and start to connect dots in a way, if you will, and then see it get backed up with flow, backed up with real guys, real people putting real money behind their positions. So Warby being one of them. Then, so we see the open interest stick, right? Not only for this year's expiry, but the following year's expiry as well. I'm like, oh, they want duration on this. Okay. So the change, so it shows that the change of it was 6,485 change in the OI, showing that OI from like yesterday or the last trading day prior was only like 100 contracts. Only like 100. So they're well over their regular or their norm in a way. And these people are just like really piling in, really positioning heavy into this too, right? They got the same year 20 strike and then the same, right? Then in that case, I believe the guy that we just saw that sweep for was this contract with this you see go across. So this shows you the confirmation of people actually wanting to hold that contract. At the bottom, you can see the net change, 7,633 calls to 5 puts. You can see where it said, cool. Warby on the week, initiated a position, 1857 range, pushed in. Warby shares, pushed in a bit more. Warby shares the ensuing day. Like, okay. Then I'm seeing more flow come in at the beginning of December. Yo, December 12th, $20 calls, 22 cents. People pushing in heavy, 1.5 or 150, so 4K pushing in. I'm like, all right. Checking on the chart. I'm like, listen, so far we're moving great on the position that we set up, right? See what happens. Ensuing day, more and more stuff comes in. People putting in sweeps. Some of them are a bit smaller here, 40K, 70K, but still strong sweepers until the 8th comes. 8th comes via the 8K as part of the Android show, the XR edition. Warby Parker is announced to be the first lightweight AI glasses developed through their partnership, expected to launch 2026. Breaking news. And we see Oracle, geez, not Oracle. No, definitely not. Sorry, definitely not them for sure. We see Warby going full frame here. And it steps up from being at the 17, 18 mark into now the 30 plus mark within effectively a week. Insane price movement. And you know what I mean? I'm marking off the top range where the top may want to cool off at in this 30 range at which it did. And it's a beautiful sight to see. Ends up being a 4,000% trade plus. Like um I do still have some shares as well as some options because I did stretch out my options positioning a little bit into June as well. I believe I grabbed the June 30s as a strategy. So I mean, that was definitely something that I enjoyed playing in. Felt great, really. So now I think, I mean, on to the next. Like, you know, I got Warby shares, as you saw, like 17, 18 range. After watching it for so long and I'm feeling like, okay, maybe I actually need to step into something right here and I really get into it. And that's what happened. So I'm trying to see some more things. Oh, I want to talk about this week's schedule. And then also some sectoral picks. I believe this report is from Goldman as well. So that's another thing. I did see some Tesla. Sorry, pardon me. Some Tesla sweeps come in pretty aggressively. This was what we drew up a while ago. It didn't quite. No, it didn't quite get to to where we wanted it to be at that moment, that first time. But ultimately, we are seeing like a re-entrance into what I believe would be the next trade, really. Like here, if Tesla could really break out and show something. I mean, it generally runs on like news. And the news I think it's gonna be really talking about as of right now is the robotaxi field. That's the most important thing that's like currently focused on by Tesla right now. And I think that's gonna be something super huge. But the other piece that I wanted to note was Uber had a relatively down week. I'm thinking it's out of the belief that they're not positioned well for the robotaxi. I saw sweep after sweep after sweep. I mean, albeit shorter duration, like same month, like December's, but they were trying to take this name down this week. Like, and they were, and really Uber was just trying to really chill up at 100 for the first time in a long time. Sorry, the first time ever for real, right? You know what I mean? But it made the move out of the range from basically earlier April that we were stuck in, that torching range. And as of now, it's been not doing so hot. And I think it's because people are concerned that Google and Waymo is taking its food and Tesla is going to take its food without labor because they don't have to pay anybody when the robotaxis. right? There's no individual, there's no human factor in it. So effectively, some of these other offerings could be much more cost effective for the business and cost effective for the users as well. Rada, such and such, ABC, at least until, profit mind comes into play. And then they're like, all right, we got to turn on the profit machine now. And then you start looking around and you're like, well, that $2 ride that once was is no longer. What happened? And it's for the mere fact that, it's time to make money off this joint. You've had it now for quite some time, but now it's time to make money off this joint. So that's something super important to look at here as well. Because I'm seeing people talk about, oh, Tesla's robotaxi is so cheap and da da. And I'm like, okay. And Ubers used to be $5 back in high school, back in 2015, 2016. That don't mean that these robotaxi things can't get just as expensive, if not, but just with a higher margin because they don't have the labor factor, right? Like, so yes, they could probably undercut actual Ubers right now easily, but what does that look like in 10 years? What does it look like in 5 years? Not to say that anybody cares right now, right? The sentiment doesn't show that they would care about that type of thing right now. No, they're not. They're more worried about collecting market share at this cheaper cost point than currently. Oh, you want to ride somewhere? Yeah, hop in the robotaxi. Not the Uber, no, the robotaxi, because you don't want to talk to the Uber guy anyways. You know what I mean? You didn't want to talk to him. So that's how they're going to treat it. So yeah. Past catalysts. We talked about the Fed event. I shared my point of view on it. It was like, I think we're gonna get our quarter point, and that's about it. But that's kind of it. It does look like market wants to slow down a bit here, and futures are open right now as well. We go take a look at that right now. Futures are green though. That's lit. Oh, metals are rallying. Okay, they're trying to get back up. Could be honestly, the Friday could have been a great dip buy where, silver is still on a roll, platinum, copper, all of them, still all gold for sure on a roll. Look at this. Like, this looks beautiful. This is a torch right here. If you ask me, we're about to do a blow off top valve. Like, boom. That we've done so many times prior. Like a sickle almost. Like you just and rum. Could be doing the same damn thing soon. Sickle, rum, into 4,700, 5,000. Even some banks are calling 5,000 on gold at the ounce rate next year. I'm like, what? This thing is huge to be doing this movement. Like, it's beautiful, really. We haven't seen a gold rally since the 70s. Actually, so hold on. I just shared that as well. Gold rally. We haven't seen a gold rally since the 70s. Like this, at least. You know what I mean? It's kind of cool, but based on the comparing of the timelines, it looks like we about there. You know what I mean? We about there. And this last hoorah, pardon me, may be the one. But who knows? You know what I mean? The dollar debasement is still a thing. And not only that, but we're loosening conditions, we're making, greater economic conditions, but for growth. But I mean, I don't think that's slowing down the. I don't think that's slowing down the debasement of the U.S. dollar. Um, so if we look into next week's focus, it looks very, very macro heavy. UBS, or no, sorry, Reventive put together this chart showing a few things happen. So Tuesday, we got the November labor market report. And then Wednesday, we got retail sales. That's going to be something super huge. Then on the 18th, we got the inflation numbers, CPI inflation. All while Trump was just saying that inflation doesn't exist, like rada. This is what's going on with stuff right now. So yeah, I mean, I think that's something super key to watch out for, right? We're getting into the following week, third quarter GDP report. And then FOMC meeting minutes from the last meeting we just saw the report from, of the decision of them, deciding to cut a quarter point. Then we saw the JP Morgan Healthcare Conference, or we're going to see, sorry. And that's in January. And then December labor market report. So we're getting a lot. Getting a lot. And it's honestly a lot of we don't know, right? Because look, even UBS and Reventive and these other firms are looking at it like expected impact. These are the colors that they would associate it with, right? They're all blank. You can't see the one right here because I'm in the way a bit, but they're all blank. Nobody knows what's going on. I don't know what's going on either. I'm just trying to derive little scraps from the rest of the market, trying to, you know what I mean? Like, so I do think that, we're in a better environment with less pressures simply because of rates collapsing a bit. They're not collapsing at neck breaking speeds, right? But that's what's going on. So if we take a look at this a little bit further, I haven't really read this. I wanted to just kind of look through it. It's giving a sector view as well about like least unattractive to most attractive right now. Communication services, AI should improve content recommendations, advertising, cost efficiencies, along with new opportunities in monetizing generative AI products. Top picks, Meta. Okay, cool. Financials, right? Easing regulations, increasing capital markets activity and mergers and acquisitions. Yep, true. We saw that last week also with the whole Netflix, Warner Brothers, Paramount debacle. Everybody wants to get a piece of whatever. So it seems like it's a lot going on. And that fits right into the Trump regime, right? Like everybody wanted to bring in Trump because of the mere fact that like he's going to get rid of Lena Khan's. Like activity will occur, flow will happen. He is pro-business. What needs to get done will get done, or what he perceives what needs to, at least, right? Like, so think of the S&P Globals, Capital One, KKR. That seems to be this firm's top picks. Yeah, this is UBS. I could tell from the font and like how they set it up. I'm trying to forget. But yeah, I think it's UBS. So UBS says those are the top ones. Healthcare. Recent policy clarity have been supportive, and we think that there is a further move to go. Valuations do look attractive for Abbott, Eli Lilly, Johnson & Johnson, some of those similar companies. Not to get into politics here, I don't really like to trade off politics in a way as well, but I do notice that the healthcare debacle that came from it, the government shutdown, really played deep into healthcare, right? The disagreement there was that the Democrats wanted an extension on the Obamacare Affordable Care Act subsidies from the U.S. government to help pay for it, right? To make it as cheap as possible for the citizens here in the United States. And the Democrats were not in favor of the cuts that the Republicans placed in front of them as the option to go with. Because of that, they decided to hold out their votes and essentially lead to that stalemate that we saw with the government shutdown. Now, unfortunately, there was some kind of like collateral in a way where things like the TSA and the federal federal aviation, the people that do the aviation tracking, like making sure planes don't crash into each other, they had their individuals stepping out because they're not getting paid at the government shutdown, right? We had SNAP becoming a question mark of low income individuals and families not being able to meet their needs and have food, right? So it was, in a way, this whole debacle led to like the Democrats trying to fight for something that was much, much deeper in the sense of healthcare, right? But it came with some shrapnel in a way that was really, really hard on a lot of people. And that led them to kind of back down much quicker than they wanted to, right? They wanted to hold a front. They wanted to hold united, but all the pressure that got locked up, they didn't quite fold. The Republicans didn't quite, fold on their cards, and it ended up biting them back. So now with healthcare going to increase, right? Like that's why they're looking at this sector like such. Not only that, GLP-1s, like if you ask me, if it wasn't for AI, what would hold up the economy? GLP-1s. Right? Like, based on my understanding and my bit of research that I've done, we haven't had anything like this since Viagra in terms of the healthcare sector and the utilization of drugs, like reinvigorating the, and how the spend is so massive and related to this one drug because of, bro, hey, look, I'm so serious. It's not even a joke. I was looking back on the I was looking back on like the cultural impacts of these. I'm like, yo, when was the last time we ever cared about a major drug for real, right? Like, obviously, right? We get the woes and the random headlines every now and again, like, oh, we're about to solve this cancer, we're about to solve this like other diabetes thing, or like, you know what I mean? And then we get the trial run and they say, oh, it's great, it's doing good. You know what I mean? Rah, rah. And then We hear nothing. Still haven't heard anything about that since. You know what I mean? I don't think we got no real cure for cancer, do we? Like, let me, y'all, if y'all know, let me know. Shoot. But um, but right now, GLP is the whole thing. It's the whole package because it helps with the weight loss, right? Which then also leads into helping on the regulating of your sugars, um, and so many other things. And then also, while you're on the drug, you're actually required to work out. Like it's a part of the regimen. Otherwise, you'll like experience muscle atrophy. Basically, like almost like if you went to space for like 8 months type. You know what I mean? So what it kind of is doing in a way is giving a kickstart to individuals who maybe aren't quite able to gain ground with that or are facing huge medical headwinds. You know what I mean? And they need to find a way to get rid of it quickly, um, all while setting you up with a routine and kind of the reoccurrence of working out and like getting used to it and the unison factor of it, right? So I think that is also why it's like so heavily like pushed. And what ends up happening is when new research when in the space of pharmacy, when new research comes out, when when you have, when you're starting to gain traction of like what's really performing and what's really doing well, it starts to become industry standard very quickly. Because a lot of pharmacists are very in touch with the cutting edge. This is what this report is. Like they're required to, right? And what it does is it ends up becoming a flywheel of, oh, this is the best thing to do. Cool. Best thing to do becomes now like the main thing to do, like in every situation. It almost becomes like a catch-all, and like, so it's like, oh, you have a problem. Does it somehow fall within the diameter of maybe weight, of maybe blood sugar, of, you know what I mean, of like, oh that hit, yeah, GLP. Go ahead, run with that one. Take this one, and you got to be on there for like X amount of period, whatever time. You know what I mean? So it's not like, oh, one prescription and that's it and you're done, right? Like it's really a recurring thing. So yeah, that's why healthcare is doing really, really great, as well. Information technology, it's they're really talking about how what? Retritude? What is that? I'm hearing inklings of retro, bruh. RETATRUIDE. I ain't never heard this during my life. It's a chemical compound of obesity. Oh, this is Eli Lilly's. Okay. 1 week triple hormone receptor antagonist. Damn. Like, yo, they be naming these things like crazy clockwork. Mm. Yo, oh my gosh. So it's more effective and have less side effects. Hey, I mean, if that's the case, to connect it back to the stocks, it looked like that's why Eli Lilly going with the where it's going. Eli Lilly is the top 10. I'd say. I think it is. Is it a top 10? Maybe not including like private markets like Saudi Aramco and other companies, but I think in the US market, I think Eli Lilly is top 10. It's just below $1 trillion and definitely was in the $1 trillion market cap beforehand. Honestly, this pullback, hold on, wait, my fault. Y'all aren't even seeing this. Maybe this is about to lock in on Eli Lilly. You know what I mean? Boom. Massive expansion out of the look at this scalene triangle. Come on, like massive expansion out of this base that was made from 780, 800, pushed well into the thousands, right? Now we're in $1,000 per share. Had a period where I don't even know how many days this is, but 11 days of straight losses felt like it was trying to go to a whole nother world. And then out of nowhere, now we get in a cool bounce. And I mean, if you ask me, this could probably be a dip buy for an opportunity to push higher in the long run, right? We got people talking about how this retrotude functions as a single peptide molecule that activates receptors for glycogen like peptides, GLP-1, glucose dependent insulin. Whoa, I know nothing. Insulinotropic polypeptide. I'm sure that has something to do with the insulin. Talking about its unique mechanism of action that enables synergistic effects of the insulin secretion, glucose homeostasis, and appetite modulation with energy balance, potential leading to greater therapeutic outcomes than single or dual antagonists. Yeah. This is fully out of my realm. I just tried to read and understand from like a first principles point of view. So yeah, but this pullback though on Eli Lilly, like don't let no flow come through along with it. Like this could be beautiful. Let's see. So boom, we could probably drop our 5 lines here just to play. Or 6, I'm sorry. So cool. We're right here. I think the entry should be above this doji, to be honest. So whatever this doji's high was, what was it? 1031. All right, so 1031, I'll call it 1030. So let's call it 1,005, something like that. That's managed risk here. Sorry. Could probably push this to a TP. Say TP, like I like this, like look, you see this right here, this section right here, where we had a slew of green days and out of nowhere we hit some type of down. That's what's telling me potential peak price target zone right here. Like I need to put it somewhere right about here to make it 50. Shows that there's some exposure there that we need to manipulate and kind of get around to be able to get higher. Above that, I would probably put T at 1100 just below the highs, just to keep it, respectful in the sense that it could get there. And then I'll put one right in between, 1075. And I think that's how you can play it. Very smoothly, very easily, right? So like in this case, depending on the premium on that option, I may try to get the 1050. I always try to get the strike that is out of the money, yes, to show there's a lot of um, gamma and delta appreciation in the option price, but to allow it to be in the money by the first PT. So that way, if we continue to rise and it takes a little longer and we still push, guess what? The option's in the money already. So we're not losing as much to theta and to the other premium decays and the Greek decays that generally come through because we're already in the money, right? Off the first appreciation move. So something like this, if we were to look at potentially the like we're getting close, super close to flipping into the new month on options price or on options choice. So I mean, forget it. I guess at this point, 15th, I'm already flipping into the new month. So whatever contract is the middle of the middle of, let's check. Contract expiries for February. February, probably the February 13th, maybe. That one may be the main monthly option. So 213, 150 strike. And effectively try to get three calls. You know what I mean? 3 calls. Price target 1, 1050, sell 1. Price target 2, 1075, sell 1. Price target 3, 1100, sell the last, and move on. On to the next. Like, could be that. And then on the downside, right, in terms of protecting the risk, in terms of protecting your potential position is if we move down from this 1027 that we closed on Friday, maybe push into 1010, something like that, where we're getting close up on the managed risk here line, I may sell 1 contract or what is effectively 1/3 of the position to defend as we approach the managed risk here line, potentially and if we continue to push down lower, 1,000, 980, whatever comes from that, right? Then obviously sell the position, take the L, and move on. Find the next trade, find the next place to park capital and move on. But if it steps down towards the managed risk here line, maybe you sell a piece, maybe it gets a bit constructive, like maybe it does a little dance down here in the range, a little undercut, and then boom, right through, boom, dance, boom. Something like that could be the possible path of price, right? So maybe you take the position here off the entry, off the belief that it may do one of these joints where straight green days over a period of time. And if that's the case, then, we're in and we ride it through. Trim, 6, 7, 10% later on the underlying equity, and you end up probably selling here, first PT, 40%, 50% range gains. Second PT, you're up at like 110% roughly. Especially if this happens within a week or two of owning the contract. Then you step into the third PT. By that point, you're probably at 180% return roughly. Right? Like, that's kind of the no-brainer of it. So that's something I like. I do like this healthcare space a little bit. Full sweeps too. NVO has been a bit beaten down, right? So nowhere near Eli Lilly's up nearby its highs. But I mean, this could be very well something that could continue to build. I've drawn it out here. roughly. I have not traded NVO, but it hit the first price target basing from 40 change into 50 now. And we continue to see this move where this now operates as its base, and we confirm, make a move, step into the 70 change, and step into the recovery mode, where NVO starts to also get some love within that sector. So that's again just some more thoughts to go over. But if we connect back to this piece here, and it looks like, so information technology, XLK, some of these under-level companies or underbelly companies, Micron, they're saying, Microsoft, they're saying, NVIDIA as well. I do think as of like now in the shorter term, that some of these companies will receive a lot of up, down, left, right movement in the way, right? Where like they're not all just gonna go limit straight up like usual. Like, you know what I mean? Like they're gonna have some trouble on the way there, you know? Like, for example, Micron. Oh man, Micron was a great trade. Like they call out Micron here, and I'm like, yeah, I traded him last week. I drew this up. I said, yo, this looks like a great breakout here. Break of the 240. My mantra's key line. I moved it up. Boom, we broke. Trading day, we continued pushing. I was like, yo, we could probably hit 250 soon. Hit 250 the very next day. After 250, we closed that day 52, pushed higher, 255. Into the following days where we opened, we closed that day at 263. By that point, it had already hit my 3 PTs. What did I do? I trimmed all through this whole thing. Trim, sell 1, sell 2, sell 1, sell another 4. Oh, hit my price target, sell half, right? Like sell throughout this entire move up. And what do we get? A full-on retracement of the price in 2 days. A full retracement of the price in 2 days. So effectively, we could run the same trade back. Run it back. Right? Like why not? Nothing. Fundamentally, the story never changed, right? Over this past 2 days, the story never changed. They never got any less profitable. You know what I mean? They never got, right? Like nothing super duper crazy happened. They do have earnings coming up. That could be something you want to keep an eye out for, trying to trade this into this week. They got earnings on Wednesday. That's definitely one. But it could just quite literally just run it back. From 240, step back into 245, 250, next thing you blink is 265 again or something like that. Like it makes sense to me, roughly. Especially if earnings comes out this week and it ends up being good. So yeah, that one was an awesome one to see and come back to. Got hurts on that one always. And then we got this last sector that they find attractive. Defensive characteristics offer ballast in a portfolio. AI-powered demand should bolster the growth outlook. Constellation Energy Group, Entergy Corp, Xcel Energy. Let's see. I think Constellation Energy Group is CEG. Yep. And CEG is the name that I also recently called out. I think that was interesting to see its price do what it did. Like, you'll see what I'll tell you in a second. Look at that. Look at that. So boom, I'm looking at it like, yo, things look good over here, right? Like constructive. We get into this point, we're gonna squeeze in. We're squeezing in until we have this true decision making side, a true decision making example of like, yo, we're limit up. We have a huge breakout day out of the squeeze for the following day to retrace all of it, all of it, all of it. It's crazy stuff. But I mean, these are all names that you could see. You could probably connect back. The way I'm viewing it a lot of these times is like, hey, it's a dip buying opportunity, you know? Especially if you're somebody that wants to trade shares with it, right? You don't have the element of time and fighting time with contracts. Just grab more shares. If the thesis didn't change, right? So Entergy, I don't think I've ever seen this joint. But okay, Entergy. Yeah, they've definitely stepped up out of this. I've never seen this name as an energy name, but yeah, up almost 100% over the year change. Oh no, actually no, it's not. It's up 21% year to date, but including last year was really its growth. Like where it saw a vast majority of its appreciation, like 60-70% roughly. But this could be something here to keep an eye out for. Like maybe this bad boy retraces down into this 86, 87, or even the 80 range, right? Like something like this maybe happens. Right? Or something like this happens maybe. So something like that may happen. Or maybe even something like this kind of happens, where it wants to respect levels and it does it both by stepping in, digesting, stepping down, digesting before breaking out. Especially if it follows the theme. So I'm going to add that to my energy sector here. As you can see, I have other names in the energy sector. NEE being one of them. That one was announced to have done some deals with Google, I believe. Next Era Energy. I know that they also own FPL, Florida Power and Light. So if you hear of any data centers coming to Florida, that could be something to keep an eye out for. Ultimately, this entire thing really just means like keep an eye out for something and try to remember it when it's important. Like that's basically all this whole thing is in the markets, really. Try to remember something. Try to, you know what I mean? Like try to see where things kind of make sense to push off from there. So that's that. Some of the names that I've been watching into this week, as I've mentioned, some of them I have positions on currently. Some of them I do not. But here's some chart logic. Tesla, we talked about it. Things look good here. Things look constructive here. We've also seen some strong flow in it too. Although the flow on Tesla to me kind of comes with a caveat for the mere fact that some of these guys are just insane. And to explain this flow right here, this guy came in with January 26, 500 calls, paying above ask. Who's doing that? Why are you playing above? Because you want to get filled of crazy volume of 300 shares on it to put 387K worth at work. So yeah, I mean, so pardon me. This guy comes back and doubles back 5.44 million on the 500 calls expiring next week. You best believe I'm watching the open interest on Tesla tomorrow to see if these contracts actually stuck. Do they actually want to hold this, or is this guy just trading this? You know? All these, like, these were much more short dated sweeps, right? December 12th last week, December 12th, same day sweeps. But some of these other ones that came in, stepped in with good size, talking about 455, talking about 500, 5.4 million. I literally saw that flow and was like, I beg your pardon. I beg your pardon. 5 M's? Okay. Okay. Let's see. Let's see. You know what I mean? So that frog was another name I really liked. Had a nice torch setup, broke out well, and held price really well too. All while everything else was selling out. Right? So that kind of goes back to what they were talking about when they said that the sector, pardon me, was actually going to be a bit favorable. To me, that's XLK. And how I think some of these underbelly tech names, right? So not as sexy tech names are gonna have great runs, like a frog, right? They sell packaged software in the IT services field. It's an $8 billion market cap, like, you know what I mean? And it's also super up on the year too. It's had a great years. Can you explain more them full sweeps and flows? Yeah, sure. Like, explain the meaning behind them. Like, what do you mean by the full sweeps? So, all right. So I'd say sweeps are orders. That's what it is, and they're called sweeps because they are really large orders placed at once with the intention of getting exposure into it and fast, right? So when I say the way I use sweeps in a way are to confirm or deny my trade thesis. One second. One second, guys. Apologies. All right, so let's finish talking about sweepers, Simone. So a sweep again is a sweep is just a large order. A large order in the sense of it needs a lot to get filled. So when you're buying something or when you go to the market or anywhere, maybe they have three of them. Maybe they of anything, whether that's a gallon of juice or 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 just some bananas, right? But if somebody were to come in to a market and say, actually, I want all the bananas because I think bananas are going to increase in value by a ton soon. So I want all the bananas, right? You think that that person's just going to go to that one stand and take that one stand's bananas? No. They're going to go to, I find that they may find their way to other stands as well to take their bananas and pay, you know what I mean? So what the sweeps are basically people placing large orders that have to get filled across multiple clearinghouses and different exchanges to be able to actually fulfill that order to get the amount that they want. So when you see sweeps of crazy stuff come through, so like actually let's just go through some sweeps. And like I'll just break down what I think it means. I'll break down what I think it means, could mean, what it may not mean, and how dumb I am. Like, you know what I mean? I don't know what they mean. Um, let's pick this week's. So all the sweeps from December 8th through. Well, let's talk through those. Let's see if I could get them all. Oh boy, it's a lot. It's a lot of sweeps from the 8th. All right, so let's talk through it. So from the 8th, we started off Micron, 1.68 million. You know what that did? Hello, we just talked about it. What Micron did last week. Hello, we went straight through, push from two something into 250 plus, right? The flow tells you. Like why else? This is the way I view it too. Why else would you put 1.68 million on something to go to the upside in calls if it's not gonna do it, or if you're not heavily like in belief that it will do it? You know what I mean? Like it's almost to this sense of a lot of people say like, "Oh, I'm just following the crowd," or I'm not a contrarian thinker, or whatever the case may be, because I'm using flow to help confirm or deny some of my ideas. But I think a lot of people miss the point where, or maybe in their fundamentalist viewpoint, it's like, oh, you know, you're supposed to be contrarian because you're supposed to be finding the value, finding the deal, right? Because they're taking maybe a point of view of Warren Buffett, right? Like Buffett had a knack for finding companies that were undervalued. Pardon me, undervalued dramatically, and was able to buy them while they were undervalued to whatever assets they have and liabilities that they had net of, right? And then also buy so much of the company that you end up on the board and you can actually enact changes in that business and now become effectively a decision maker in that business and
find ways to increase profitability and push those things. And to be frank, I don't have that. I don't necessarily have that power or that pull to be or to find the companies and then be able to go to the great extents of now implementing new things to help them grow and become a better business and rah and all those other things. So, and also with a retail account at my size, I'm not going to be the person putting 1.68 million on a Micron bet, not yet at least, right? But these are the people that are moving the markets. At the end of the day, the price is moved when more people are buying or more people are selling. Every day you come to the markets, you're supposed to understand this. Price and buyers and sellers move the market. More buyers than sellers, guess what? Price has gone up. Why? Because the price has to be more attractive for sellers to actually want to sell and then vice versa. So think about buyers, think about sellers. Who are they? Why are they? What are they doing? You know what I mean? Like that is what is important. And then you search for an understanding in what would change someone's mind. What is changing someone's mind? What is maybe making a seller a buyer? What is making a buyer now into a seller, right? Start to classify those bits and pieces of information in your head. Understand that when a company puts out a stock offering and says, oh, we're going to sell another 500 million shares or 500,000 shares into the market, that's literally the same thing as Nike dropping Tokyo 5s in 2025. It's the same thing. You guys remember Tokyo 5s and how hard they were if you were in the sneaker game at like 2012 or 2013? Like Tokyo 5s were a grail. What? Now all of a sudden it doesn't matter because they were made at mass. You know, so like when these companies offer these stock offerings, they're increasing their denominator. Increasing the denominator in the sense that there's more of it available. So now it's less rare. It's more of it available, so now it's less rare, thus effectively decreasing the value of their stock share. Right? And also if the share offering is at a lower price than the current market as well, of course it'll drive the price down. And inversely, share buybacks, when you guys hear these companies, oh, they're doing buybacks on this, or they're basically is when a firm buys back the shares from the public market to then be locked up in institutional use. Maybe it's used to in mergers and acquisitions. They want to go purchase another company, maybe, or they want to offer it in their equity package to their team members, or maybe somebody in the C-suite that they want to bring on board and use it as like a pot sweetener to bring them on board. Right? Hey, sir, well, we're going to sign you, but we're going to give you 100,000 shares of XYZ and blah, blah. You know what I mean? Like use it in that stance, or maybe even use it in other financial decisions, like collateralizing your own equity to go get another more line of credit. And that's the riskier way as well. But that's something that happens. So that's something that happens as mentioned. So yeah, EOSC, I really like this one. I like this name as well, like long term. The battery technology looks really good. Short duration on the call, so not too much emphasis behind it as well. And it's not out of usual. It was kind of the usual right now. Pure Storage, PSTG, that's a data center kind of name to be looking on the lookout. 222K. That's a real deal. That's a real deal offer. Like that's good money. And they picked up calls, but it looks like they got reversed on. But they have January, so it has some duration on it. Gold, another sweeper. They don't play around this thing. When you see sweeps on gold, they come in 500,000 plus, like $1 million plus. So this guy's talking about 700K to the upside on gold. Ondas, the drone company, that one gets swept up like no tomorrow. But then they also do offerings like every other day, and then the stock falls 8%. It's so hard to play this one. It's honestly an equity focused one. Like I think I'd rather just sit in shares than get in options for the mere fact that every other day it's like a burn. It's like a burn notice. Like, oh, we're up 10%. Great, we're on trend. 2-3 days later, it's down 12 for whatever reason. Weak market day. Oh, we're down. Stock offering. Oh, we're down. Whatever reason it is, it's just going through it. So probably the best way to deal with that and not feel the emotions of the up, down, left, right, and center, equities. Because you'll be down 8%, sure. But that doesn't mean anything. Like over the longer term of the view. In this case, if you're trying to play long term on Ondas, you got to worry about theta burn. You got to worry about so many other angles that come through. I honestly kind of believe Ondas ends up being a $30 a share company. When that happens, I don't know. But based on the focus, like the critical focus, and I believe I shared this video as well with you all. Jamie Dimon and some other financial executives talking about how like this drone technology is super important to U.S. sovereignty and XYZ. Like this is where the money's going, whether we wanted to or not. You know what I mean? It's where it's going. So trying to follow the money, trying to follow the breadcrumbs, see what makes sense. And these sweeps are breadcrumbs. They help lead you with what I'm like, I guess now calling marrying the data. Marry the information. Marry the fact that you saw a Warby Parker sweep as well as retail data come in showing optical strength to do that, so that you end up in a position and news just so happens to break while you're in the position and boom, perfect storm. I didn't know that Google was, I didn't know about those rumors. I didn't know Google was going to do the Warby Parker glasses like thing. I just saw the breadcrumbs and I followed it. And to my, I guess to the blessing that it is, it wasn't a trap. It was the breadcrumbs to a pie, as opposed to a trap where I could have gotten my hand bitten off or something, right? But yeah, so seeing some silver bets come through at good size. USAR, which is a metals company, if I'm not remembering, earths company. Yeah, it's the USA Rare Earth Company, and they had a hugely phenomenal week. I think on the week, oh sorry, not really huge. Last week was a hugely phenomenal week. Sorry, but not this last week. But I mean, they did have push-ups of 10%. So this is probably a trade, to be honest with that person. They took that 230K, probably ran it up. That's, I mean, like next week expiry on the 18 calls, took it from 16, 17, it was 1692 when they bought it. They probably took it into the high 18s. That's about 100%, 80% trade right there on that, on the 230K. Bro, you could hit these base hits all day. 230K, you tell me you return 75, 80% on that? Yeah, all right, talk to me soon. Like, that's what's up. Saw some more views. People are putting in some good duration on XLF, the finance the finance. Can't even talk. Finance ETF. That all goes back to what we just talked about when we talked about sectors and sentiment, right? Cutting up the rates, how that's helping out financials, how Citibank, how JP Morgan did all that jazz that they just did. Goldman Sachs is over here going crazy if you've seen Goldman Sachs lately. So yeah, you got some people looking into DraftKings, the sports betting side of things. Nothing too much. We had some appetite for Meta. People putting in March 670 calls, at a million at a time. Like basically 1.4, 1.1, 500K, 492K, 482K. Like these data points are clean and really, really important here. Silver showed continual volume. That was when we saw that big, huge squeeze. HIMS also getting some love. 420K on this, crazy. Gold, metals continue to happen. This is another one I want to talk about. SGHC. Okay, got it. I swear I've been seeing this name for months get sweeped. SGHC. And it's been sitting here in a range at like $11. I got you. Hold up. Look at this. $11 range. But for some reason, they keep on sweeping the April 17th, $10, $14, $13 strike. Right? Like somebody knows something somewhere, you know what I mean? That like they're talking about a 20% upside by April. And I'm just trying to figure out like why, when, who. And it's not because like I know anything. Like the company is a sports betting company. Like, okay, sweeps are coming in alongside DraftKings. That makes sense. Okay. I saw people were heavy into the January 11 calls, and they did really well in their earnings as well. Last earnings, November, stock was up like 13%, right? So like it showed that it was up off the earnings, but then started to sell off and repeating that April flow over and over and over again. I'm trying to check the open interest to make sure it actually sticks, and it is. People are still sitting in these calls. So me, as somebody who reads these and likes to read the breadcrumb, I'm marrying, right? Like I haven't looked too deeply into SGHC, and maybe I need to a bit further. The sweeps are consistent and they're heavy. November, I was seeing April sweeps, 280K, $10 strike, 310K. They continue to add. Some of them are rolling positions, right? Where we see, I saw people like super focused in the 15 strike, 16 strike, and then you start to see on the bid side that they get a little bit overweight. So that means that the bid side was more active than the ask side. So people were selling more than people were buying on that strike. But then on some of the cheaper strikes, the 10 and the 11, I'm seeing heavy ask and no bid. So I think that's where individuals were rolling down possibly to try and protect their premium through this data burn. And rolling down from the 14 into the 10, 11 at one point. And then now they're back trying to tackle the 14. So they were just trying to like protect the money in a way. Like, oh, from this downturn, like, okay, protect it a little bit, cool. And then like, let's stick to the 10s. But now I'm also seeing people piling into the 15s and the 16s again. Like, what's going on in Supergroup Limited? Global global digital gaming company, which engages in global online sports betting businesses. Betway. Oh, Betway, a premier online sports betting brand. A Spin, a multi-brand online casino offering. Betway, Spin, others. Something that's going on that's doing a lot. So this is where I was saying, like, and then once you see the data and you see what's going on, you start to marry the data with the technical information. I'm gonna go chart this real quick. And if you ask me, this $10 range right here, this 10 to 10.50, 11, that looks like a base. Price does not want to go. The collective of the market is saying that this asset is not generally worth less than $10. So once you have that, it's almost like a base. It's like a put major in a way when we talk about GEX, right? The put is basically at $10. They don't want to see any lower than this. And then you start to look at this, and you're like, well, I mean, we are kind of basing here. We can do multiple bounces and confirmations of the 10. And then we're also getting a little bit tighter here in range, right? Like it looks like it wants to break out and really push higher. And then it ends up, you're looking at it, it's like, oh, it's the perfect scalene triangle here, where this looks like the possible path of price. Whether that's tomorrow, whether that's by March, I don't know. But it's about positioning yourself and protecting your risk in the meanwhile to be able to sit through it if you can, right? Whether that means you got equities or you got some options with some duration so you can sit through it. So I saw that, as well as I saw this AAOI company come in. Huge sweeps there. 500,000 June sweeps with 55 calls, like the huge upside. Lots of put selling, which they're able to say, yeah, I'm about it, like, right? Like I'm bullish. When you see put selling, then you see, right? Look at this, put, sell. So almost all the flow on all these puts. Like they're like, yo, I gotta get out of it. I gotta get out of the puts, right? And I need to get into the calls. I'm on the wrong side of town, bro. I need to lock in. And then you find a way to look back and you see, okay, well, chart looks good. Chart looks good. Like, think about it. Chart looked great to me on the week. That's why I drew up this plan right here. Right? Entry at the 29 break. We broke 29, pushed in the 32. Price target 1 was hit. Price target 2 was later on hit. Like the following day. I trimmed all through it. And then I ultimately trimmed so much that I ended up out of the position. I was like, oh, I got one left. I didn't even notice. Okay, I guess so. All right, trim. And ended up out of the position. So I didn't get to hit all 3 PTs here, but I managed risks and trimmed on the way up. And here's the other part too. When I say trim, if you're able to collect multiple calls or multiple positions in this case, you guys ever notice that, like, when the option goes in your favor and it's like drastically moving in your favor and like it starts to compound, the gain starts to, like, oh wow, it's like 20 hit you over the head, 32, 48, 56, like you end up 56%. Oh wow, right? And then the moment you see one little pullback, one little 0.5% pullback, one little hiccup in the buying, the premium cut. Now you're back at like 10%. Like, what? Where did all the gains go? 10%? That's why I also trim into strength. because more times than not, you're going to end up locking in more profits on that side than trying to sell when it's going down. So sometimes some people may say, Nedrick, why are you selling here? Like, we didn't even hit price target 2 yet or whatever. It's because I've seen this game so many times where you're on the right side of history, you're on the right trajectory, but the way that the options pricing is set up, if you're not good at getting out exactly, because sometimes I'm working, sometimes I'm doing other things, I'm not really on the chart every moment, every waking bit of the day, no matter how much I message you all, and you guys may think I am, but I'm really not. Like, in the working day at least, I just trim because it gives me a peace of mind of like, yo, hey, I protected some by locking in. And I locked in when the contract was probably mispriced to the upside, another 8% higher than what it should have been, just because on the compounding of the rack of it all. So yes, we saw AAOI do a great move from last week, 20-some% in a few days. Similarly with Rocket Lab. I'll go over Rocket Lab real quick and then I'll probably call it a wrap here. But Rocket Lab came out, tons of sweeps on the 9th. Then I saw this one come through. Same week sweep, 850K. Wow. Rocket Lab secured some type of Canadian agency development program clearance, and seems like Toronto's about to try to do some satellite stuff, and they could spend Rocket Lab some money. Also, while SpaceX, same industry, similar products in a way, talking about their valuation to $800 billion, right? This could affect valuation in the public market, similar to TMUS, similar to SATS. You got to look, when you think about price comps, this all what the market is. The $27 a share of whatever something is, or $1,000 on Eli Lilly, is just the valuation of the company, distilled down to the per share price. Is another space company being worth $800 billion good news for another space company? Yes and no. It depends on how much that other space company is currently worth. So Rocket Lab stepped into the week basically up, or basically worth like what, 20 something billion? About 20 something billion, probably 27, 25. And then this week it ended up being worth 32 billion with a 26% candle on the week. Why? Because the perception of space, the understanding of space and its use and its cases to get satellites, its cases to now also potentially be, a place where data centers can go, the valuation is much higher. Right? And it could affect other companies the same way how when you want to go sell your home and they're like, oh, well, Bob down the road sold his house for $500,000 and his house has an extra bedroom. So I don't know if you'll be able to get $500,000. That's the same thing happening here. Price comps. When you go into a bank and they say, oh, well, discounted cash flows or they do a WACC of which is a way of valuating a company, taking out cash basically. This is what they're doing. Price comps. They're looking to the other companies in the industry to figure out what are they doing, what are they providing, and what differentiation do you have to it. So in the case where a company is very, very similar to something that's also private, and in a way, maybe, yes, albeit smaller, there comes a bit of sympathy that comes with it, where, oh, I can't trade SpaceX because it's not on the public markets, but I could trade Rocket Lab. I could trade ASTS. So it creates these opportunities. You see sweeps come in, 700K, 800K, right? it's also like 222K bet. Like people putting huge money behind these bits and pieces, and you get to understand like, oh, that's why, right? TSM. Who the heck put 12 million on TSM puts? And what does that tell me? That kind of tells me that the hot sectors in the AI, the chip manufacturing companies, maybe they're not doing so hot for the foreseeable short-term future, maybe. Oh no, they're sorry, my fault. It was a put seller. It wasn't a put. It wasn't a buy. It wasn't a buy situation of the put. So this person was a put seller at 300, basically top. So I look for certain sweeps. RDW, another name that's kind of interesting with that same Ondas like security focused play. Uber, like I mentioned before, was getting hit because of the robotaxi stuff. Lemonade had some great moves, right? So this is where you can marry data with the chart, with the logic of the chart, the understanding of the charts, right? To try and figure out where the timing works. You buy enough time, you buy enough duration with a good strike price, you can just sit there and coast with it, with the sails, with the wind at the back of your sails, and just trim and trim. It ends up being a stress-free scenario most times, or a little bit more than 50% of the time. And that's pretty much it. That's it from me really today in the stream. I hope you guys enjoyed it. I'm going to maybe take a look. I'm also working on developing a 2026 kind of like theme of the year write-up research compilation. So that should be something that I want available to all in a way. So, but that's it for me. I'll talk to you guys in the next one. Agent out. Peace.